Good afternoon, and thank you for joining us for this post-budget briefing webinar. Just a couple of housekeeping measures before we do get into our webinar today. We do have two options available for audio. You can dial in using your computer audio, or you can use your phone. The details are on the menu, which you can see in front of you, or on the connection to register for the webinar. If you do have issues with your internet access, I do suggest that you do dial in using the phone so that you don't have any interruptions to today's audio. So David Shaw will be running us through the budget changes today. Because we know that you are all very busy, we will not be having question time at the end of the webinar. However, if you do have any questions, please feel free to submit them through the question box there, or you can send them through via email afterwards, and one of our team will get in touch with you afterwards to respond. So again, thank you for taking your time out of your day to join us for this webinar, and I'll now hand over to David Shaw.
Thank you, Sarah, and welcome everyone to our post-budget briefing. And it's always an exciting time of the year, budget night. You probably were glued to your TVs watching the Treasurer talk about where the country's finances are going from a federal government point of view in the next 12 months, and in this case, really in the 1 to 3 and even up to 10 years. Some of the budget measures have been put in place. So I thought it was a great budget because it was a budget that actually looked at the practicalities of what can and cannot be done in the short term. And I think now, excuse me, I think now it's all about looking at the long term and where we're going as a nation and where we can actually provide incentives to the taxpayer over the next 10 years. So just a couple of things, just as we get into our presentation. Yep, it's a general advice, this information. So remember, it doesn't constitute specific financial advice, and our financial advisors in our firm can certainly help with that, and they're all very busy, given the fact that many of our clients like to see us as the trusted advisor and use our services in our financial advising area. But enough of that. We're talking about our agenda, and the things we're going to talk about is individual tax rates, including the offsets and the Medicare levy. And I've got a particular focus that I just want to take you through here. A little bit about the deductions for small business, fantastic things still in place for small businesses with upfront write-offs. A little bit in the research and development area, I think that's worth touching on. And there are some, let's just say in the detail, there's been a few things slipped through in relation to interest during construction on investment properties. So this is not good news if you're a property investor from 1st of July 19. I'll go through a little bit more like that. We're also going to talk about some rulings in relation to specific high profile, whether it's sports individuals or actors, and some of the things that they now can't do in terms of spreading income. Always each year, the ATO talk about compliance activity, and I want to go through some of the things that you need to be aware. The ATO is getting very sophisticated in what they're doing in terms of their compliance, so I want to talk a little bit about that. And also just some additional changes to superannuation, not much this year, for obvious reasons, because there were a lot of changes made last year. All right, let's have a look. And obviously, after budget night, you can read a number of different, articles, and this is a couple of articles from the Financial Review. And that graphical illustration sort of gives you a bit of an idea of what the government's trying to do with announcing tax changes over 10 years. Is that you can see all the people in the red there who are paying less than 39 cents in the dollar or 37 cents plus the Medicare levy. The aim is basically by 2024 to only have 6% of the population paying more than 32.5 cents in the dollar plus the Medicare levy. I think this is absolutely brilliant. And when we just talk a little bit more about these tax rates, you'll see why. There was always a move to have one marginal rate between about 37 and 180 grand, and by 2020 you're going to have one rate between 41,000 and 200,000. So it's a really good move the government's looking at putting in place there. So I'll continue to talk about that. I'll give you a little bit of in the next few slides. Also, you can see there, squeezing on tax deductions. Of course, the ATO are always going to have a compliance focus, and I've underlined a few things, how they've been given additional money over the next 4 years to complete compliance activities. And one of those, and we may have spoken about with some of our clients, is if you're a tax agent and there is a red, orange and green light system they use, if you're a green light tax agent, your clients are likely to have less audits. So there's a very fine balance between claiming deductions and claiming too many deductions, right? So they're always honing in on tax agents, of which, of course, we're one of them. I've highlighted a few other things. The ATO has noticed that work-related car expenses have gone up a fair bit. So that was in that article as well. And that's really important because it's so important to keep a logbook when you have a motor vehicle to be able to prove your business usage. And we've also highlighted, which we're going to talk about later, about denying deductions on the interest on land, and it's got a little bit more far-reaching, consequences than we thought as well. And there's a round-robin arrangement for trusts where money goes into a bucket company and then goes back out to a trust. The ATO do not like that. So if you've got a business, we'll certainly make sure you as clients don't do that round-robin arrangement. Right, let's go to the next slide. Lots of things we can talk about, but they're the current tax rates you can see there. No tax to 18,000, 18,000 to 37,000, 19 cents. No changes proposed there for the next year, but the 32.5% tax rate, remember that went from 80 to 87,000 last year. Now it's going to be bumped up to 90,000. So it's avoiding bracket creep where additional taxpayers are going into that 37 tax rate. So, and that starts from 90,000 now up to 180,000. So there's an immediate change right from 1 July, which is coming up really, really quickly. Also, with your low income tax offset and low and middle income tax offsets, basically there has been a low income tax offset. You can see there it applied up to $37,000 and then gradually gets pared back up to $66,000. Now that's going to be slightly modified where we have a low income tax offset, but then there is going to be a low and middle income tax offset extended from not $66,000 but all the way to $125,000. What does that mean in real terms? At the end of the year, you do your tax return, and if you're under $125,000, depending on whether you're 0 to 37 or 37 to 48 or 48 to 90, you can see that the maximum you will receive in an offset will be $530, and then after that $90,000, it will gradually begin to peter out. So that's going to be good for obviously taxpayers coming up into that, when they do their tax in the 2019 year, which is only just over 12 months away. Remembering there is that change in the actual marginal tax rate now between 87 and 90,000, so that will give some additional help. Changes to the Medicare levy, you can see there, we've got up on the screen. You can see the thresholds have increased slightly for singles and families, right? So the threshold in which you don't have to pay the 2% Medicare levy, and then if you're a single pensioner or a family pensioner, you can see those thresholds have also increased slightly. So they're very small changes, but low-income earners don't generally pay the Medicare levy. One good thing about the Medicare levy is that the government has announced it's not going to proceed with the previous changes in the Medicare levy from 2 to 2.5%. So isn't that great news? And that really was going to take place coming into this next financial year, and consequently we've only got a 2% Medicare levy. So the Treasurer actually, before budget night, actually let everyone know that was going to be the case, because the receipts from tax takes are better than was expected. So it's really fantastic. This is great news if you're in small business. Really fantastic news. The $20,000 immediate write-off for assets purchased is going to be extended from the 30th of June 2018 to the 30th of June 2019. Right, so that's really, really good news. And that means that even in the next financial year, if you have an asset of $20,000 or less, and that's plus GST, so it could be up to $22,000, that you can claim an immediate deduction. Please note, in-house software and horticultural plants aren't eligible in that, okay? So just be aware of that. Also, this is a new one, and this is something that's really got to be looked at by some taxpayers out there. If you haven't been withholding PAYG obligations for wages, so you just put in a wage at the end of the year, you don't take out any tax, you're not going to be entitled to a tax deduction on that wage. So that's really problematic. Also, payments to contractors where an ABN is not provided and no PAYG is withheld, you're not going to get a deduction. So we're going to have to go through a process with contractors of withholding PAYG and also wages, making sure all wages are PAYG withheld, and that's from the 1st of July 2019, right? So we've got a year to really get our house in order in terms of that. And look, our business clients have probably could be a lot of work to do in that area. Cash economy as well. You can see that it was much publicised. I think it's a great initiative. A limit of $10,000 on cash payments made for businesses on goods services. I'm surprised the Treasurer didn't reduce this to $1,000. At the end of the day, most people have a card, they can pay, and we want to eliminate cash economy transactions because it means that those that do pay their tax pay more tax. So I thought that was a good step for the government with that cash economy. Also research and development, and it's a large area in itself, but I wanted to talk about the fact that there is now what's called an intensity scheme being put together, where the more intense your R&D activity is in terms of true R&D expenditure, the more R&D benefits you're going to get. So that's quite a significant change, and we'll look forward to seeing more of the detail in the coming months. Now, if you're a property investor, sorry, don't like to give you bad news. When we originally read this, we didn't think too much of it, but now we've had a bit more of a look at it. From 1st of July 2019, deductions are going to be denied for expenses associated with holding a vacant residential or commercial land. So this is really not good news, and this includes interest. So you can only add the holding costs to the cost base. Really, really disappointing this. Means some of the tax rulings will probably be changed or repealed after 1st of July 2019. And if you're constructing an investment property, you're going to have to capitalise those holding costs during construction. So you won't be able to complete a tax variation on that property most likely, or claim any deductions before the first dollar of rent is earned. How terrible that is for our property investors. But if you're going to construct an asset in the next year, do it before the 1st of July 2019. Okay, imaging rights for high-profile individuals. Some of you may not be aware of this, but famous people would purport to have imaging rights that would be owned by a trust, for example, and then other beneficiaries would be able to earn income. That's all been scrapped by the Australian by the government, I should say, and all that remuneration is going to go to that particular person. So that's something that will affect high-profile individuals. The ATO target of compliance activities, and I did touch briefly about it when I looked at the article with you. Motor vehicle expenses are going to be targeted. Please make sure that you do a logbook and you keep really good records for your motor vehicle. Put all your motor vehicle expenses onto a credit card which is dedicated to that motor vehicle, and make sure that you really have good records in terms of what motor vehicle expenses are being incurred, and a good logbook. If you don't, you're more likely to get an audit, and the ATO will want to disallow some of the deductions there. Not many changes in superannuation. Remember, we've already had First Home Saver superannuation announced, where you can salary sacrifice if you're a younger person and take money out for your first home if you've never bought a home. We've got, for taxpayers over 65 that want to downsize the family home, can put $300 in super each. But generally speaking, over 65 years old, unless you're working, you can't actually put money into super. This change, I think, is really good, because if you have under $300,000 in super, and that's an individual member's balance, then you will be able to, the year after you retire, so say you retire, then you might sell a property, for example, you'll be able to sell that property, pay the capital gain, and put another $100,000 into super after 65. Before this, we were limited basically to pre-65 in terms of being able to do this. So it's only the first year after you actually retire if you're over 65. So over 65, 1 year of retirement, then in that first year you can put that $100,000 in. One final thing is really wasn't discussed much at all, but probably because it doesn't save or make the budget any money. Self-managed super funds from the 1st of July 2019 will be expanded from 4 members to 6 members. It makes logical sense because there's a lot of families, you might have 3 children or 4 children. At the moment, 2 of those can only be in the self-managed super fund. So from the 1st of July 2019, those members are going to be increased from 4 to 6, right? And another thing too that a lot of our clients and taxpayers may be happy about, if you have a squeaky clean self-managed super fund and you don't have any contributions, any issues, you run it really well, then you will only be required to complete a self-managed super fund audit every 3 years. So I think this is really good news, obviously, for a lot of our clients and a lot of taxpayers that actually do the right thing. Please note, if you get any contributions during that 3 years, you will not be eligible for this criteria and have to continue to get your audit each year. So the moral of the story is get your super fund absolutely squeaky clean, no contravention orders, and then you only have to do an audit every 3 years. So good news for the taxpayer. Now, that just about brings us to the end. There are other things I can talk about, but I'm mainly concentrating in terms of this budget talking tax, right? And if you want to know about other aspects of the budget, such as infrastructure spending, etc., then you can read that up separately. So I just wanted to thank you for attending, and if you have questions, love those questions to come through at info@wscgroup.com.au. And as you can see, we've got Facebook links, Google, YouTube. We've got a YouTube channel. So we like to keep abreast of our clients up to date through these methods in our education webcast. Just a reminder, if you're just learning who WSC Group are, we're the 77th largest accounting firm in Australia and fast growing. I founded the firm in 2002, so we've been going for around about 16 years now. We now have 6 offices. We have very much a local focus where clients work with us in our local offices, and we have 3,000 property investors, about 800 small, medium-sized businesses, 400 self-managed funds, and lots of auditors, clients, and as I've said before, financial advising and lending services. So really love to be able to help you as your trusted advisor in all these areas. And look, I know technology's got really fantastic these days, but come and see us or book a Skype call or a go-to meeting call, or all these things you can do these days. Part of our service is that we really want to provide a quality level of service. Please use that, and one of these is obviously attending these sort of webinars and podcasts, which we're looking to do into the future as well. All right, thanks very much for your time. Remember, send those questions, and hope that gives you a bit of an update on what has actually happened through the budget. I think it's a great budget, particularly in terms of framing long-term tax planning, and let's hope that all that gets through in the next 7 or 8 years, and then most of us won't be paying the top marginal rate, and I think that will continue to provide incentive for the economy. Thanks for your time. I really appreciate it. Thanks.